Good evening, ladies. In today's video, I want to go through a high revenue protocol known as Maple Finance with the ticker Syrup, which has gone on an absolute tear recently. So the reason I'm looking at projects with high revenues and high fees, basically I'm looking for projects at the moment that are making a lot of money, because I think crypto is a maturing industry and people are kind of getting sick of investing in, all this infrastructure that no one's really using and that's not making any money whatsoever. That kind of speculative aspect to crypto is behind us, and now people want to actually invest in things with real growth and real revenues. So the best way you can go out and find these kind of protocols for yourself is you just go to DeFi Lambda, you search for fees and revenue, you can have a look through all the highest earning protocols and investigate them for yourself. So in today's video, we're going to go through Maple Finance, which is making about $1 million a month, and it's been on an absolute tear in terms of TVL growth, which is also very important, as well as the amount of revenue that they're earning. Ideally as well, just to add on to that point, we want protocols that are directing the fees and revenue. Like ideally you want the fees and revenue to be going back to buying back the token, or to be shared in some sort of staking revenue share model. And Maple Finance is sharing. It was kind of hard to find how much of the revenue that they're sharing back to the token holders. One figure said about 20% of the revenue that they're earning is going back to buying back the token. But even still, at the end of the day, if there's even I think it's enough that a protocol makes a lot of revenue and makes a lot of fees. Even if it's not buying back the token, people want to see high revenues, they want to see good fees, and then eventually somewhere down the line there is the opportunity or the potential that they'll go and buy back the fees. So I think it's just enough that it makes a lot of revenue, and if it actually goes like something like Hyperliquid where it uses those revenue to buy back the token, even better. So as we can see, one of the best performing sectors right now in crypto is lending. So we're going to go through two lending projects. In this one, we're obviously going through Syrup, and in my follow-up video, we're going to go through Liquidity, which is a smaller DeFi play on Ethereum as well. So Syrup is a borrow lend. This is back to basics in crypto. You don't need to reinvent the wheel. You just need to do the most circular wheel, meaning you need to create the best product in a narrative or in a niche that has found product market fit in crypto. And a niche that has found product market fit to a huge extent, obviously, is borrow lend, like a decentralized DeFi platform. And that's exactly what Syrup has done. So Maple Finance with the ticker Syrup again is these are a few of the products that it's offering, and it's mostly has targeted institutional clients. So people who want to get yield up to 10% yield, and all of this is over collateralized with the blue chip is Bitcoin and Ethereum, the one in the middle there, 7% yield on basically people who are borrowing, like institutions who are borrowing against Bitcoin and Ethereum. They are paying out 7% interest. High yield, that includes stuff like Ripple and other, more questionable tokens, but you can get higher yield, but the collateral is not as strong. And then you can even get yield directly on your Bitcoin. So again, this is mostly targeted for institutions. On top of this, it's over collateralized loans. So, if the margin goes below the loan value, it can get liquidated. But on top of this, Maple Finance came from a traditional finance background. So they're doing credit checks on all these people taking out loans, these institutions. And, they're not giving loans out to anyone. They're giving loans out to people who are, they're not giving loans out to the likes of 3 Hours Capital or something from the last cycle, who are doing really risky stuff and potential that they could blow up. They're being a lot more they're using credit checks. They're using all the best tools from traditional finance and applying it to now decentralized finance. And their most popular new product, you can actually take part in all of these. You can actually lend through Syrup and you can borrow through Syrup. Even though it's institutions mostly on the back end, there's ways you can plug into these pools and get these yields for yourself. And their most popular product now is this Syrup USDC, and you can see the TVL for Syrup USDC has powered most of the explosive growth for the Maple Finance project over the last year or so. Absolutely exploded. Now has over 2 billion in TVL from, you know, very little a year ago, and it's mostly thanks to this liquid yielding dollar. Basically meaning if you hold this Syrup USDC, you can just hold it in your wallet and it's a yield bearing asset, so it's going to grow like 7% in value over time without you having to do anything. So we can also see now Maple Finance is number 19 in terms of DeFi projects in terms of TVL. So it's still quite low in comparisons to other big projects, but also what comes with that is a slightly lower market cap. So like I said, Sid, the co-founder, came from a TradFi background. He's been in the DeFi space for years. Maple Finance has been around for years, but they're finally finding real product market fit and differentiating themselves in terms of using their TradFi background to do proper due diligence, proper underwriting, proper credit terms, etc. And the other nice thing about these yields and the loans themselves, they're fixed rate loans, which is, you know, better for institutions. They want to know how much they're going to pay in interest terms and how much yield they get as well. So the Maple Finance team are structuring these loans, and then anyone can go into these pools and borrow or lend against those terms that have been set out by this TradFi centralized team, essentially. And this has actually worked very well. They've already got big partnerships with the likes of Cantor Fitzgerald and other big TradFi arms, and they've gotten great reviews, etc., etc. So the team itself are doing well. They're doing a good job of underwriting. Now, the interesting part, is it making enough revenue to actually invest in the token? Here we can see the protocol revenue is exploding. So in the last couple of months, and for this month, they've already made $1 million. We can see that in May, they made just over $1 million, and again in June, they're likely going to make even more than $1 million in protocol revenue for the month. Now, making $1 million a month is pretty good, and we can see the growth is exploding, but to make it this investable, we want to see continued growth. Like, I think revenue is the most important metric we can look at when investing in these kind of protocols and projects. Obviously, the revenue is going to be very much tied to the TVL. Like, that means there's more loans being generated and there's more collateral in the protocol. More collateral means more loans, means more revenue. So you need the TVL to continually increase, and that will allow the revenue to continually increase. Obviously, we don't want to invest in something that's making a small amount of revenue but has a huge market cap. So what is Syrup's market cap right now? The market cap for Syrup at the moment is just over $600 million, and it's pretty much fully diluted. Because it's been around so long, it's very close to fully diluted, which is a really nice thing to have in your back pocket, meaning there's not going to be a huge amount of inflation that will undercut the amount that you could make in, like, even if the market cap goes up, if there's a lot of inflation, obviously your token price isn't going to do well. The fact that this is almost fully diluted is quite bullish. So $600 million market cap, currently making about $1 million a month. If we extrapolate $1 million a month over the next year, that would be obviously $12 million for a year. So 12 over 600 million, that's about a 50 price to earnings ratio. However, we can guess that the revenue is going to increase over the next few years. So a 50 price to earnings or price to revenue multiple is quite high. But if we imagine that the revenue is going to increase over the coming months, then that 50 probably drops. Like I said, they're making $2 million a month. Obviously, in like 6 months, that would be a 25 PE. So I'm really on the hunt. I think the best way to do well in crypto over the next coming years is to find the crypto Mag 7. For me, I think Bitcoin, Solana, and Hype, they're the 3 of the crypto Mag 7 that have been chosen, that are like got enough adoption, enough revenue, enough network effects, enough revenues to justify them being what they're worth, and probably will continue to grow, getting even more network effects over the coming years. And I think the rest of the crypto Mag 7 have yet to be chosen. So I'm really, really looking out for them. So I'm going to be researching so many projects over the coming months. So make sure you're subscribed if you want to see them. Do I think Maple Finance is going to be one of the next crypto Mag 7? For me, I think it's a bit too early to tell. It is making revenue, but it's not making insane revenues yet. So, and it's a 50x PE multiple. So for me, I'm not going to invest in Maple Finance. I think it's already run quite a lot. However, I wouldn't say it's a terrible token to invest in. If you are invested in it, I don't think that's a huge mistake either. But just for the price right now and for how much it's run, I'd probably wait for a pullback, and I'd also want to see the TVL and revenues continue to increase. What I wouldn't like to see is for revenues to flatline or for TVL to start flatlining or even dropping. I think that would obviously be very bearish, but you definitely want to see the growth continue to explode. And then if the token price is taking a bit of a chill, if it's slowing down a bit, maybe at that point it could be a better investment. So for me, I'm going to pass on this one just because probably a bit late to it at this point after how much it's already grown. But it's a really good project, really good team behind it, doing really, not so much innovative things. It's just doing what works in crypto, but doing it better than other projects have done it before. So that's all for today's video. Hope you enjoyed, hope you learned something, and make sure you stick around for tomorrow's video on liquidity, another DeFi project which is exploding. All right, cheers.